Welcome to the Trading Market Technicals morning call video for Tuesday, November 19th. Interesting development yesterday in the markets. Dow Jones up only 14. Nasdaq ended up being down 36. S&P down 6, almost 7 points, and the Russell down almost 9 points. Carl Icahn speaking actually retweets a message stating that the market is due for a big pullback, and sure enough, the markets heard what he spoke, and about the last hour, markets sold off pretty hard right into the close. So we had nothing going on pretty much most of the day, and sure enough, when he did say something, I guess it rattled the markets a little bit, and the market sold off about the last 45 minutes or so into the market. So interesting developments, and get a lot of emails, and hey, what do you think? You think the top's in? Are you ready to short the market? Absolutely not. It's 1 hour, not even an hour of selling. Markets are down a little bit this morning. We're down about almost 4 points in the E-mini S&P electronic session. But again, guys, one day does not make a trend. We need to start making some lower lows and lower highs. We are coming into seasonal strength as well. I mean, this could very well stay elevated or trade sideways into the new year. So you've got to be really cautious about being short. That does not mean we can't get a 2 or 3 or even a 4-day sell-off and kind of at least reset the momentum indicators to at least some sort of a neutral reading instead of this grossly overbought reading. But we do see continued cracks on the wall. Excuse me. I'm going to point that out to you with some of the indicators that we see. But remember, price is what pays the trader and the investor. So if the markets are moving lower and we're making lower lows and lower highs, and we have this bearish symmetry, that's fine. But right now we are in a screaming bull market, and the markets continue to make higher highs and higher lows. So that doesn't tell me, for a day trade, sure, if you want to get a day trade off on the short side, or if you're looking to short, a weak stock, that's fine as well. But right now, let's not, it's too early to say that the markets are at a topping pattern, or at least we got a local top in place and a tradable top. And that's really not the case. So just keep that in mind. I wouldn't want anybody to go out looking to just short the market here. For a hedge, absolutely. I'm a big advocate for hedges. I think hedges are great. And they're made to lose money. So they're supposed to protect your long position or your short position for that matter. But anyway, let's go into the indicators. I want to show you what we're looking at. Right now, this is a tick, New York Stock Exchange end of day tick reading. We are still hovering about this area here, right around the zero line. But I'm watching to see if we continue to start breaking down. If we start breaking down and stay below the zero line for a little bit of time, that's telling us that our breadth indicators are starting to break down. The markets are starting to break down here. So something that I would continue watching. I would recommend that you guys watch. Pick a few of the indicators. You don't have to look at all of them, but some of them are really good. New York Stock Exchange, new lows starting to creep up here, guys. Now we got this little resistance area here, and once this starts to break out, and we start getting into that 75, 80, even 100%. That's something that it's going to continue to say, hey, we have new lows in the markets, and now that the fact stocks are starting to move lower, that's going to be an interesting development. So this is one that I'm really, really watching closely. New York Stock Exchange new highs. We basically stayed where we are. I don't have it. I just wanted to just kind of show you real quick. I didn't want to get too much on the indicators, but we're still moving along higher. But you're not going to have new highs, 52-week highs, and new lows moving higher as well. So something's going to give soon. McClellan Oscillator, good breadth of the market as well. We're stuck here right on neutral zero line. So again, just telling me that we can move higher and or lower without being overbought and or oversold. So this is neutral right now, not giving us much other than the fact that there is room to run before we could become overbought or oversold, something similar to like this matter here. This is what I'm looking for. Every time we get into those Bollinger Bands, as you can see, we get that reversal. So keep an eye on the McClellan Oscillator. It's been kind of quiet of late, but again, this is something that we want to continue to watch here. A couple things that I've been looking for as well is watching some of the other key sectors like the semiconductor sector. Now, I showed this to you late last week, saying that we do have an ascending triangle at the upper end of the range, which is really nice to see. When you get something like this, you usually get that continuation pattern out of the ascending triangle. And obviously, the semiconductors is one of the key factors of this rally to continue. We are a little bit overbought, but MACD's did unwind itself a little bit, and we're coming off on the slow stochastic as well, but it's still reading a little bit overbought. The thing is here, we failed to break out here, so maybe we come to the lower end of the trend line, which that'll catch the 50-day moving average and then break out. So keep an eye on the semiconductors. The banks also are doing quite well. I've been pretty bullish on the banks, but just recently, just as of Thursday or Friday, I believe that J.P. Morgan broke out yesterday. Goldman, Citibank, they all broke out. I think when you have bonds breaking down and yields rising, obviously that's good for the banks. Their bottom line, I think the bank sector is going to, regardless of what the market does, if the bonds continue to break down, you're going to have money flowing into these banks. And again, if you have these rotation of money coming out of, the higher speculative tech, let's say Russell, for instance, and going into the banks, that's great. But you don't want to see it going into utilities. You don't want to see money going into consumer staples, because that's parking money, because they're telling me that investors are nervous that there might be some sort of a major pullback here. So again, that's not what you want to see. But if you got rotation coming out of banks and going into certain different areas of technology, that's a great sign. But anyway, here's the bank sector, the BKXO, looking good. We did break that ascending triangle. Now we want to really take out the highs here. So keep an eye on the banks as well. U.S. dollar. Well, actually, let me just show you the bullish percent of the XLF, which is the banks and financials. The XLF here did well yesterday, and I'll show that to you in the chart segment, but we did get that crossover again in the bullish percent banking sector ETF. Okay, so we did get that crossover, and that is what I'm looking for. We did cross back down, now we're crossing back up. I like to see the crosses always usually right up in here. I like to see that, but it really didn't do much. If you looked at it, we were actually sold off while the bullish percent actually went higher. So kind of weird, but this actually now is on a buy signal for the bank. So any weakness in the banks would be looking to get long the bank sector going into the end of the year. All right, so let's take a look at the U.S. dollar. U.S. dollar here, bull flagging right into support. We've got some good support here. The 20 is starting to curl up here, so momentum is shifting to the upside here. We do have that bearish reversal, right? High, lower low, lower low, lower low, lower high, and now we reversed from have this bearish symmetry, and then now we're actually starting to make higher highs and higher lows. So this here is a bull flag to me, and if we can take out here, watch the commodity sector and of course even equities, because if we get some key movement in the U.S. dollar, I think that's going to spark a good movement, a lot of movement in the forex markets, which is welcomed. Really haven't done much of the forex markets since March, been kind of quiet. A lot of these majors in these large triangles and these formation patterns. So it would be nice to see the dollar either break down or break out and start moving. That'll put a good tone of risk on or off in the other majors as well. Now, if you look at gold, I love gold short, and unfortunately, I am not short. I wish I was. We can't even get a dead cat bounce in gold. And I mentioned watch gold because I don't think gold is going to rally. We might get a little bit of pop, and that was only if palladium rallied. And look what happened. Palladium actually had a failed breakout, broke down, and now has broken below the symmetrical triangle here. So if palladium's moving lower, a lot of these other metals are not going to move higher. They're going to follow what palladium does. So to me, I think gold is going to at least wash out down to that 1,000 to 1,150 I've been saying for the last couple months. Then I'd be a better buyer of gold down there than, of course, not at that area. But just keep an eye on it. Watch the palladium. If you like trading gold, you got to watch palladium, because if palladium moves lower, gold's going to follow. Okay, let's go into the chart segment, and we'll see what we got here. Here's the hourly chart of the E-mini S&P. As you can see, we're down 3.5 handles in a pre-market session. These are the areas that I'm looking for here. Now, we got, obviously, you have the 200 period moving average, which is 1777. That'll be the first real area of breaking down. But as you can see, there's a lot of support here. You have 1772. You have 1752, 1742, 1737, which would be that low. But if you look back, you got a lot of heavy support at that 1737, 1734 area. There's a big cluster of support in this area. So a lot of support in order to break down. Now, that doesn't mean that if the market does start to sell off hard, we're not going to break down from there. I'm just saying it's going to be much difficult for the market to move lower and it's going to pause. But if we start breaking below these areas, and that's going to be where areas a lot of market participants are putting their stops. So once you break them down, you're going to get a chain reaction here. So daily chart, we hit 1799.75, and we briefly hit 18 in the cash, the SPX cash. And then rolled over again. So those round lot numbers are definitely going to act as resistance, at least for now in the short term. So keep an eye on here. As you can see, we hit two extensions in the Fibonacci extension areas, 1272 and 1618, and now we're just starting to roll over. Remember, we're still above that 8 EMA, which marks a good momentum, and we still have momentum here. So again, one day doesn't make a trend, but something to keep an eye on in the coming days, no question about it. Spiders couldn't break above this uptrend line here, so we're still holding true to that line. Maybe we get to pull back to the 20-day moving average, but again, there's definitely a deeper downside correction could be in the cards. We just have a lot of support to break through. Here is the diamonds. Diamonds here held up very, very well. The Dow Jones is up actually Dow Jones was up while the other key sectors were down. But as you can see, very funny. Markets come all the way down here when the markets were selling off in early September and October, and nobody wanted to buy the Dow Industrials. It gets a 200-day and just rallied out of the blue with 3 days down, I think, out of like 26 days. It's just absolutely ludicrous. Transports actually hit the other target. Now, we hit this target in this uptrend line. So target has been hit. We've made all-time highs. Now, watch what oil does. Now, oil did get decimated yesterday, and I will show you a picture of crude oil, which I forgot to show you. Watch what crude, because if oil does happen to, and this is crude oil, if oil does happen to bounce, then you're going to get at least a little bit of profit taken in the transportation sector. Gas is now getting cheaper and cheaper, but I still feel that oil is going to get at least a dead cat bounce here. We have positive divergence in the MACD. You have the slow stochastics, you have the MACD, and even RSI up above here. So markets are moving lower. You have positive divergence. You have the 20-day lows. You're at the lows now. Not saying that it can't go lower. What I am saying is that if we take out this area here, I'd be looking for that. Still, remember, if you're looking for a trade and you're looking for movement, get yourself a trigger first before you start looking to just get in. Just because price is at 20-day lows, you don't want to do that. You want stocks. You want this crude oil to start moving higher, and whether it be 15-minute, 30-minute, an hourly chart, whatever time frame you trade, look for the trigger and look for it to move higher. My guess is a real true trigger for on a daily chart would be a break above 95.40, which comes in perfectly above this upper end of this cluster, this little channel resistance here, that sideways consolidation, and now coincides nicely with the 20-day moving average. If we can take that out, then I think you're going to have a deeper upside retracement, maybe to that 200-day moving average, which would be 98.50. Keep an eye on it. Still has a lot of work to do. We are still have lower lows and lower highs. We have bearish symmetry here. So I'm not saying to pick a bottom. What I am saying is watch it closely for a trade. You might be able to get maybe a point and a half out of it for a 2 or 3 day run. But again, broke down out of nowhere yesterday. Crude oil, and I'll show that to you again in the chart segment. But here's the IYT. So keep an eye on oil if you like to trade the transportation sector. IWM as well came up nice and now kind of tagged it, and then we didn't quite make the high. So they're still actually very weak. The IWM's money is definitely coming out of the Russell 2000. Again, a good gauge of risk telling us that, hey, let's be a little cautious here. So I would definitely be watching what the Russell does as well. A lot of these sectors I'm on watch with. I like looking at all of these 5 sectors that we talk about on an intraday basis. Here's the XLF. And the XLF here did very, very well yesterday, broke back out again. Oh, one thing that I wanted to mention, and what I didn't have, and I should have had, and apologize, is the VIX. I mentioned on Sunday's video for Monday's trade that the VIX actually broke outside of the band. We needed to close inside the band, which it did. That actually provided is now on a buy signal for the VIX, which is a sell signal for the market. So just keep that in mind. Now, there are some times where that signal does give you some sort of a choppy reading. But right now, the VIX is on a buy signal, and we have a confirmed sell signal for the market. So let's see if that holds true. Again, one day doesn't make a trend, but it's something interesting, and I wanted to point that out to you today. Okay, and we have the Goldman Sachs. Banks doing well. Goldman broke out finally out of this range. So any pullbacks, I would be looking to add, or if you're not in, I wouldn't be chasing, but I look to add on any type of pullbacks in Goldman Sachs. I like Goldman for many, many weeks. I've been talking about it, and I do think that upside target's going to be 170 in Goldman Sachs. JP Morgan, beautiful, beautiful breakout. We've been showing you the symmetrical triangle. We did have that one big pop. We sold off a little bit. That was your entry, and then now we broke back out again. Now, usually what happens on a symmetrical triangle, we will have a test of this upper end of this triangle pattern. So once we get that back test and holds, and then we start moving back higher again, that's going to be initially your add or your entry to get in if you missed this breakout. But great, great trade. We had a great call in the bank sector yesterday. Now, a lot of traders also like to wait for the breakout. We look for the back test. That'll give you true confirmation that this, in fact, has broken out. Remember, like Palladium broke out but failed, and actually failed miserably. So that's what a lot of the longer term traders like to look at. Wait for that pullback, and if indeed that pullback holds, then they will look to get in. Look at the volume. Volume actually creeped up. They actually settled with the government, so that's actually got that overhang out of the way. So that's a pretty good thing for Goldman. Now, IGM, the networking sector, looking worse again, right? So we still have this pattern formation. We are still in a confirmed bearish pattern of this head and shoulders pattern. Now we're back below this trend line, which is the neckline here. So this is still valid, guys. If you wanted to get in now, below yesterday's low of 29.78 would actually trigger, would be a safe bet, knowing that we made that lower high off that right shoulder, and we are indeed looking for the target of $27. And we have Apple. Apple broke down again. That's why I said, even though we have this pattern that we've been real quiet, Apple started breaking down. It's a little tough. I think I would like to look at Apple a little bit more at the 500 range, 495 area in Apple. And lastly is the Qs. As you can see here, Qs actually did make new highs on Monday and then broke down here, still holding a 20-day moving average. But watch what technology does. If technology starts to break down and a lot of these other key sectors start breaking down, that's telling you that the internals and the market is very exhausted and it's going to need a break. Okay, so keep an eye on those key areas. Let's see what happens if we get a little follow-through to the downside. Remember, guys, the market has given us literally 2 days down and everything else has been up. So the most that we've had as far as a correction since the October 9th lows has been literally a day to 2 days. So just remember that as well. Don't look to just go out and short the market here. Let the price action tell you that it's time to get short. All right, have a great day. Be safe, and we'll talk to you tomorrow. Take care.